It's 2 a.m. The glow of your smartphone is searing your retinas, and you're on your fourth energy drink. You're scrolling through social media, watching some teenager with laser eyes in his profile picture brag about how he turned a stimulus check into $50,000 by buying a coin named Baby Shark Moon. Meanwhile, you look at Bitcoin. It's sitting there at a staggering $74,000. You pull up your calculator and do that sad mental math we've all done. With your total savings, you could afford 0.0067 Bitcoin, 0.006. That number doesn't feel like an investment, it feels like a participation trophy. It feels like failure. So what do? You start hunting for something cheaper. You look for something where you can own millions of units, convincing yourself that's how you'll finally catch up. Friend, stop right there. You're about to walk straight into a trap that has swallowed the life savings of millions, and I'm here to pull you back. I'm Dollar Bill, your guide to the green, and today I'm going to tell you why the goal isn't owning a whole Bitcoin anymore. That ship didn't just sail, it crossed the horizon and started its own civilization. The real target, the one that actually changes your life, your brain, and your future, is 0.1 Bitcoin. I know, it doesn't sound like much. But holding just 1/10 of a Bitcoin puts you in the top 1% of humans on this planet. Most people will never get there because they're too busy chasing digital lottery tickets. Let's talk about the unit bias trap. This is the psychological glitch that keeps people broke. Your brain sees Bitcoin at 70,000 and hates the idea of owning a tiny fraction, but then you see a meme coin priced at $0.03. For that same 500, you can buy millions of tokens. Suddenly, you feel like a whale. You're a millionaire in junk tokens. But here is the cold, hard truth. 95% of those coins will underperform Bitcoin over a full cycle. Most of them will go to zero. Even Gene Simmons from the band Kiss A Guy, who is worth hundreds of millions, fell for this. He publicly admitted he bought Dogecoin because he could own more of them. If a rock star with a team of advisors can fall for unit bias, you can too. Bitcoin has recovered from every single crash in its 16-year history. How many meme coins from 3 years ago are still around? I'll wait. Let's look at a friend of mine named Alex. In early 2024, Alex had 5,000. He could have bought about 111 Bitcoin. Instead, he bought 2 million tokens of Pepe Baby Dodge because it was 2 cents a token and he liked the feeling of being a big holder. By the end of the year, his 2 million tokens were worth 380. His whale position evaporated. Meanwhile, that 111 Bitcoin would have been worth nearly triple his investment. Alex didn't just lose money, he lost time. And in the world of finance, time is the only thing you can't earn back. Now, let's look at the math. Because math doesn't have emotions and it doesn't care about Baby Shark Moon. There will only ever be 21 million Bitcoin. That is hard-coded into the universe's digital DNA. We've already mined nearly 20 million of them. But here's the kicker. About 4 million of those coins are gone forever. They're trapped in hard drives in landfills or locked behind forgotten passwords. One guy in Wales has 500 million worth of Bitcoin buried under 110,000 tons of garbage. Another guy has 2 guesses left on his password before he loses 480 million forever. When you account for the lost coins, the actual supply is closer to 17 million. There are 8 billion people on Earth. If we shared it all equally, everyone would get 150 worth. That's it. And right now, the big boys are moving in. Companies like BlackRock and MicroStrategy are vacuuming up hundreds of thousands of coins. Every time an institution buys, that's supply being pulled off the market that you and I will never see again. I have to be honest with you, and this might sting. You're probably too late to get overnight mansions and yachts. Rich from Bitcoin. The people who got filthy rich bought when it was 10 or 100. You're buying after the world has already realized it's valuable. But you aren't too late to be protected. In a world where your grocery bill goes up 10% a year and your savings account pays you pennies, not getting poorer is the biggest win you can have. If Bitcoin hits 500,000, which many analysts think is a conservative target for the next decade, your 0.1 Bitcoin is worth 50,000. If it hits 1 million, you've got 6 figures. It's not buy a private island money, but it's tell my boss I'm taking a sabbatical money. It's breathing room. But the real magic of 0.1 Bitcoin isn't the price. It's what happens to your brain the moment you own it. When you have skin in the game, you start paying attention. You stop spending $200 on fancy dinners because you realize that dinner could have been OBOD03 Bitcoin. You start developing what we call low time preference. You stop thinking about what you want today and start thinking about what you'll need in 10 years. I knew a teacher who started doing this. He didn't have much, but he automated a 100 buy every week. He stopped eating out 3 times a week and stopped going to every summer concert. He wasn't miserable, he was awake. A few years later, when his job became stressful and unbearable, he didn't have to stay. He wasn't a millionaire, but he had enough of a stack to quit and find a better life. That is what zero point 0.1 Bitcoin gives you, options. So, how do you actually get there? You don't need 7,000 today. You use my favorite tool in the shed, dollar cost averaging, DCA. You set up an automatic buy for $50 or $100 a week and you walk away. Week 1, you feel like a genius. Week 4, the price drops 10% and you feel like an idiot. Week 12, you realize your average cost is actually lower because you bought the dip and you start feeling like a pro. By week 52, you've hit your 0.1 goal. You didn't have to gamble, you didn't have to watch charts at 2 a.m., and you didn't have to listen to a teenager with laser eyes. You just had discipline. But listen to Dollar Bill here, once you get that Bitcoin, you have to protect it. Not your keys, not your coins. If you leave your money on an exchange and that exchange goes bust, your Bitcoin is gone. You need a hardware wallet. It looks like a little USB stick, and it's the only way to truly own your wealth. It costs about $100, and it's the best insurance policy in the world. Now, I wouldn't be a good friend if I didn't tell you the risks. Bitcoin is a wild ride. It's like a roller coaster that occasionally drops 50% just to see if you're still awake. Imagine you spend $10,000 to get your $1 Bitcoin, and 3 months later, it's worth $5,000. You're lying in bed at night, heart racing, wondering if you should sell before it goes to zero. This is the test. Most people fail here. If you can't stomach a 50% drop without panic selling, you shouldn't buy Bitcoin. You have to be able to look at the volatility and say, I'm not playing for today, I'm playing for a decade from now. Bitcoin isn't digital gold yet. Right now, it still trades like a risky tech stock. When the stock market sneezes, Bitcoin catches a cold. There is also the tiny risk of quantum computing or government crackdowns. And some very smart people, like the author of The Black Swan, think it's a giant Ponzi scheme because it doesn't produce cash flow, like a business does. I don't agree with them, but I respect the risk. That's why you never, ever invest money you need for rent or groceries. Here is the dollar bill strategy for a happy life. 1. Pay off your high-interest debt first. 2. Build an emergency fund in cash. 3. Take whatever is left and automate your Bitcoin buys. 4. Get to 0.1 Bitcoin and then do nothing. When you finally hit that 0.1 mark, you're going to be tempted to sell. Maybe the price doubles and you realize you could buy a used car or a nice vacation. Don't do it. If you sell, you're back to square one. You're back to being a victim of inflation. Think of 0.1 Bitcoin as your exit ramp from a rigged game. The government will never stop printing money. Inflation is a hidden tax that punishes people who save in dollars. 1. Bitcoin is your insurance policy against a system that is designed to devalue your hard work. 1 Bitcoin is for the billionaires and the big banks. But 1 Bitcoin, that is for the smart middle class. That is for the person who refuses to play the victim. 5 years from now, what's going to haunt you more? Buying a little Bitcoin and seeing it go through some ups and downs? Or sitting on the sidelines, watching the world change, while you're still holding a bag of Baby Shark Moon? Coins that are worth exactly zero? The wealth illusion is a powerful thing, my friends. Owning 0.1 Bitcoin won't make you rich tomorrow morning. It won't put a Lamborghini in your driveway next week. But it will change your mindset. It will build your discipline. And it will put you in the top 1% of the hardest asset ever created. The question isn't whether Bitcoin is going to be around in 10 years. The question is whether you'll be one of the few people who had the guts to hold on to a piece of it. Don't be the person scrolling at 2 a.m. wishing they had started. Be the person who started today. I'm Dollar Bill, and I'll see you at the finish line.